Everyone to stick with Us versus Herd. If it's your first time here, welcome. If you're interested in the content here, subscribe. If you want to get notifications for when we go live, tap the bell. We go live Monday through Friday, 30 minutes after market close. So whatever time zone you're in, just remember 30 minutes after close. We are here. We're here grinding it out. If you're not yet a member of our options trading group, the link is below, along with our Discord. If you're here right now, say what up. Richard, thank you so much for the $5, man. I really appreciate you. You've been a great support. Who else is here? Alex. We got Dustin, Carmine. Surprise, it's me. Adele, Ray Lee, Callum. First options trade today. Nice. Congratulations on making your first options trade. Glad it was profitable. Most first options trades for people, they either get lucky or they lose entirely. So glad your first one was a good one, man. Jordan, Eric, Kit, Alex, who else is here? Jordan, Aisha, Wayne. Man, some new names in here, some fresh faces. Welcome. Hamed. If you made money today, comment got paid. If you lost money today, comment learned a lesson. If you lost money due to and unrealized due to Theta, Premium Crush, IV Crush, Premium Crush, comment crush. Week is looking good so far. Nice, Rayleigh. Got paid. Nice, Brian. What's up, Baron? How you doing? Angel learned a lesson. Theta got me. Crushed. Brian got crushed. I got crushed today. I got Premium Crushed. I was telling the guys though, in the Discord, thankfully that we've been talking about the Premium Crush for quite some time, and we knew sooner or later it was going to come. You just don't know when. And when I say Premium Crush, I don't mean like it just goes down a little bit. I mean like smashed to pieces. You got hit hard. Even though VIX is what, 19, 19 or so, 19 to 18. It hit hard once it. Thankfully, like I was telling them though, is that luckily when this crush happened, I didn't have like 10 positions on. I really only had like 2 to 3. So, today I'm down 141 on each account. I've taken, I had no realized gains or losses today. Most of this was just, we'll walk through my trades. Most of this was from Caterpillar and IBM, which I opened on Friday, and they just got boom, smacked to smithereens. just insane here. I did open one position up on Netflix today, which I'll go over as well here. And let's get to it. Let's get to it here. Let's open up my activity here. I also did. Brent, what's going on? Chase plus 10%. Hey, 10% is better than what I did today. So congrats, man. Congrats. So I did do on one account here. I did do a trade on QQQs. Was just a day trade. Lost $17 on it. I'll go over that here. I opened on this Tasteovers account. I opened. So on all my accounts, I opened up this Netflix. Trade, but on the day trade, I only did it on this account. So Netflix, as you guys know, Netflix has earnings this week. And if we get over to Netflix here, Netflix, where are you? Netflix. So I bought the 400 strike call for 80 cents at open today. And actually over here, I got it for 82 cents on this account. So, we got, I was getting between 78 to 82 cents or 78 to 80 82, I would say. And as you guys know, Netflix has just had a crazy run from 229 to 340 basically, and now we're at 332. We did gap down a little bit today, but Netflix, it gapped down and just said, nope, not going anywhere else. We're doing nothing else today. We're gonna go between these 3 points here and just zigzag. So right now on that position, I am currently on Netflix. I'm down $3 on it. Opened it today. And the reason why I opened, you're like, hey, why did you open such a long position so far away? I mean, we're 70 points away right now, and really it's a speculation play pre-earnings. And as you guys know, like typically, I think Netflix runs like 10% on earnings or so, 10 to 15%. Sometimes more, sometimes 20%, but let's just say 10%. So 10% would put us at 360. And right now, I have no intention to hold this trade into earnings. This trade is a pre-earnings. A lot of times what I do is I trade pre-earnings and I trade after earnings. Very rare. I think last quarter, only one time I traded one earnings report. I think it was Morgan Stanley. The reason why is because it was sitting at the 52-week lows and I couldn't pass it up the deal. And I made some money on it. But typically I don't hold through earnings reports. I typically trade pre and then after earnings, because it's speculation. So for this, for Netflix, is it better to show you the options chain on Tastyworks or Thinkorswim? Let me know, guys. Hey, Linda, what's going on? Netflix earnings is on the 17th. The 17th, which is Thursday. Thursday after close. Tastyworks. Okay, show it on Tastyworks. TOS. Tastyworks. Okay. I think the numbers are bigger on Tastyworks. Right? Is that what you guys are saying? Okay. We're going to go to Tastyworks. Okay, so if you're looking at the option pricing here and you're looking at the strikes and you're looking at the volume, you can see down here, what I look at when I'm playing trades like this, especially speculation trades, is, the volume. The volume for these 400 calls is 1.6K. The 390 calls is 109, 1,000. And then you see it kind of gets kind of sparse until 370. So when I do like a speculation trade like this, I mainly only trade the options that have volume. I mean, 800 is pretty good. 200 is not very good. 220 is okay. Actually, you can't see that, can you? Hold on. We'll get through the day one way or another. It's just Monday. Eric, what's going on? Eric James. But yeah, okay. So what I was saying here, 400, you got 1600, 390, 1000, 370, 1000. 800, 380 is not bad. 375 is not bad. But like if you look at like 99, 92 volume, 200 volume, typically like for Netflix, I don't like trading under like 1,000, 800 to 1,000. Because I trade where the volume is, and when you're trading that far out of the money, I mean, we're trading right here. This is more than one standard deviation out. If you guys don't know what these blue lines on Tastyworks are, so if you're looking at these blue lines here, this first blue line is one standard deviation out. The second blue line is 2 standard deviations out. Just so you know. So I mean, like we're out here. But the reason why I like to trade earnings run-ups or down, I think that, Netflix tends to run up, but you can hold it throughout the week and be out of the money and not let theta really crush you that much because IV rank has expanded so much. If you're looking at these IV ranks here for the weeks, let me pull it up here. In the upper right hand corner, you're looking here at Ivy rank here for the weeks, for the weekly. Like this week's 140%, next week 79%, 68%, 62%, 61%. So because earnings are this week, that's why it's at 140%. A lot of speculation go, yes, Netflix could go to 400. I mean, if you're looking right here at the chart, last earnings was nuts. Last earnings was crazy, and we made some good money on a day trade. I think I have the video in here. I think I made like 400% on a day trade within like 30 minutes, just because last earnings was insane. And it's not because I traded earnings either. I did not trade earnings. I traded after earnings. But if you're looking here at last earnings on Netflix, we let's see here. They actually they beat earnings. It went from it opened at like 355 and it actually opened at 364 and went as high as 377 that day. I actually was holding the 400 calls here as well, and because of the premium, and it was actually a good video. Actually, if you guys are interested, I'll post it in the comments here. If you guys are interested in that video, or I'll post it in Discord or Facebook. Let me know what you guys want me to do. But it was a good learning lesson because in that time frame, I had the 400 calls. As you can see here, it touched nowhere near 400. It went up to like 380, but it touched nowhere near 400. It was another speculation play. It cost me $1 as well. When as high as $400, I was able to cash out like 380 or something like that. But it was nuts. But if I were to hold on to that when the stock wasn't moving, as you guys can tell right now, if you're holding options when the stock's not moving, as you guys can tell, like I lost $140 today per account because the stock market's essentially not moving. I mean, if you look at the S&Ps, we haven't moved. Let's see, this is the 4th day we haven't moved. Yes, we've had some swings, but essentially we're the same price we were 4 days ago, and now today was the day that the market makers decided to kind of tighten it up to reduce the expected moves. The good news is we'll be able to get cheaper options. The bad news is if you're holding, especially if you're like holding heavy, like I know some people are. I you know, as you guys know, I've been reducing my sizing, and due to this, and now that it's here, I don't know how long they're gonna, or how low can it go, because like in 2017, I'm not comparing in 2017, but you know, 2017 VIX was like single digits. I mean, it was nuts. I'm not saying you don't get there overnight or anything, but I'm just saying like people couldn't believe how low it could go. But I mean, the stock market was like barely moving. We were like literally, we weren't even crawling. It was insane. Ali, what's going on? Ivy, Alex, it's supposed to identify Ivy rank. Ivy rank is in Thinkorswim, other platforms as well. It's not specific to Tastyworks. I will say, however, Tastyworks and Thinkorswim does calculate it a little bit differently. You know, if you're looking at Ivy rank here, let's go to Netflix. You know, if you're looking here for Ivy rank on these weeklies, we got 101. This implied volatility here, and we're going to 75, 65, but then if you're looking at Tastyworks, it was 140, 140, 79, 68. So it's like Tastyworks seems to be a little bit higher than Thinkorswim, but they kind of trade off every now and then. That's because Alex, I do agree with you on Ivy rank. However, like if you're looking at, let's look at Caterpillar for a second. You know, typically option sellers like Kit here like to sell options above 49 or 50, and this is at like 49.3, and you know it's kind of borderline there. But the way that the premium got crushed, you always got to kind of check out, because we could be October, like November, December, Ivy rank was through the roof and it didn't come down at all. And if you're looking at, let's say, Caterpillar on here, you got to do your research here. If you're looking here, as you can see, we were kind of like, if you look at Caterpillar's Ivy implied volatility here, you know, was definitely maintaining a certain range, and then we broke through the range. But now, last couple days, it just got destroyed. You know, down almost 10 points here. So, you know, you just gotta be careful with it. Understand what you're buying. You know, understand that if you're buying options up in here after reading this chart, you know, we essentially just came back in range. I thought on Friday it got crushed enough, but apparently they wanted to do some more crushing on Caterpillar. So then you pay. We're paying the option sellers, but I mean it's like I said in the chat earlier. It's only right for premium sellers to get paid once every 90 days right now, and you know today's the day. So, you know, in terms of Netflix, like I was telling you guys, you know, I was looking to play a pre-earnings trade here, and then I'll be looking to trade after earnings, you know, whether it gaps up or gaps down or whatever the case is, don't care. It just usually is a pretty good day trade for me, and I've been pretty successful in the past of trading pre-earnings, and that's why that's how you guys learn is by experience, by doing things, by trading things, or paper trading these. You know, you don't understand. Like maybe some people are good at trading earnings reports. I'm not good at trading ER. So if you're good at trading them, then you could trade them. If you say you're not good at trading pre-earnings or after earnings, maybe some people are. So you know that's why it takes time to kind of tweak your own strategy. You know, just because someone trades something doesn't mean it's good for you, and just because someone sees something, maybe you see something different. You know, in the market, the market options trading is all about speculation. The market's about speculation. Not everybody sees everything, so that's why it's good to try new things all the time. And I don't mean like risk your own capital. You could easily try new things, paper trading, and be successful. And then once you're successful, you can apply that to your real accounts. Crypto Slice, what's going on? Iron Condor for the win. Yeah, the reason I've been hesitant of selling premium, even though it's been getting crushed, is because I kind of like, I don't want to say scared, but for 3 months in a row, we kept going beyond the expected move, beyond the expected move, beyond the expected move. Option sellers had to keep rolling, losing money. Meanwhile, we're getting paid, we're getting paid. So I don't like to be, like when things start going a certain way, I don't like to be the first guy that flips, because usually that person's going to be in a losing position. Not saying that selling premium is bad. I mean, you could definitely make money selling premium, but I found it way easier the last 3 months to buy premium to make money. So someone in this chat may think different. And they've been making money the last 3 months, and that, you know, good for you. You found a way to make money. Most of what you do in the market is trying to find a way to make money that fits your schedule, your lifestyle, your emotions. And if you found that, you're going to make money for a long time. Premium selling for the win. Yeah. Yeah, I mean, you have to know when you're getting, you know, just like in anything in life, you know, when it comes to options trading, you have to know when you're getting a good deal and when you're not getting a good deal, and then you can make a decision for yourself. You know, it's like, are you going to go buy this Honda Civic for $50,000? Is that a good deal? Or is a Honda Civic $20,000? You know, same thing with options trading. Things get overvalued and undervalued every single day, every day. You just got to be able to identify it. And then applying the strategy that you want to apply. So I still have... So I still have the strangle on Caterpillar. It was bullish. I have the 134, the 134 call, 126 put, and really Caterpillar just closed flat today. It had some moments like it was gonna shine, and decided not to. You know, just like it's pretty much following the trends here, except for S&P's never popped today. At least when Caterpillar gapped down, it actually had a nice hour of ripping, and then it just stopped. But right now in the market, kind of what I want to talk about is which way is the market going to go. And I talked about this last Monday a little bit about how earnings are going to define, probably the next month. This week we got the banks. We'll talk about Bank of America. We'll talk about J.P. Morgan and Goldman Sachs, because they have earnings. Citigroup, they had earnings and they missed, except for they're not as big of a bank and they went up anyways. And that's why it gets really, really tricky, because you'd be like, Citibank missed, or these people missed, they're losing money and they're doing this. Yet their stock goes up anyways, and it doesn't make any sense. Or they have, like, I've noticed sometimes, like Google and some other tech stocks, they report good earnings, and then Wall Street just sells it off. So that's why you got to be careful. But kind of what we're looking for here on the S&Ps. Let's pull it up here. It is looking a bit topped out, right? So we went from 2346, we'll call it 2350, back up to almost 2600. It couldn't quite get there. It couldn't get to where we wanted it to go. It just kept stalling out. And on a 5-day here, you can definitely see, we hit, the high was 25.97, and then we just keep getting topped out. 25.95, 25. Here's 25.95 again, 25.97. Then we gapped down today, and then we kind of went up a little bit, but really went nowhere. We still closed down the day 0.5%. And I really just think that the market is looking for a catalyst. Right now we have a lot of bad catalysts, right? We have the tariff war. We have the government shutdown. We have an FBI probe came out today, or was it yesterday, or whatever. Doesn't matter. FBI probe came out about Trump, saying basically he's working for the Russian government. I mean, who knows what's true or what's not true? I'm just reporting what's being reported, So there's a lot of things in the market doesn't like, and as you guys can see, we've been falling off, and yes, we can recover a little bit, but we could easily come back to 2350. If 2600 here is the hard stop, it used to be support, but now it could be resistance. It could be very, very well could be resistance. However, if banks smash earnings and people are smashing earnings, and we're going, we can definitely see 2700 again. But right now, I think the market is kind of reflecting the pause here before the big earnings move. Like if you're looking here, we've just been gapping now, but essentially we're at the same price we were for the last 4 days. So the market's digesting. Whatever move this was, down and up, and it's looking for what's going to happen here in terms of earnings. Now, I don't know if earnings are going to be good or bad. We'll definitely play it out. That's not what's not being complicated. That's not what's being reported. What's not the Russian? I mean, I'm just telling you what the headlines are. I'm not getting too much into the details of it because we don't have like 4 hours here. I'm sure it's more complicated. Either way, it's causing Twitter tantrums all over the place. It doesn't really matter. No, I'm just reporting what, in terms of politics, what I'm looking on CNBC, it doesn't matter. It doesn't matter if you're Republican, Democrat, liberal, whatever the case is. Whatever the case is what really matters when we're trading in the market is what the price is. The market doesn't care what side of the fence you are on. It just reacts or it defends numbers. If Wall Street in the stock market doesn't like something, it portrays that in the number. If it likes something, it portrays it the same way. So, we're all in the same team here, whether you're for or against or whatever the case is, whatever's happening, doesn't matter. What matters here is the price. It's always about the price. What up, Mike? Yeah, and then we'll talk about PCG. I saw some people make some money to that in our group. Julia. Yeah, I mean what we do here isn't about politics. It's about how the market reacts to news events and whatever the case, whatever. Doesn't matter. But the price is the price. Tyler, what's going on? Adolfo. Visa. Yeah, we can talk about that. What I would like to talk about, though, is if we're looking at the banks this week, let's look at Citigroup, what happened here, JP Morgan, BAC. Now, this is definitely pretty interesting. GS. So, very interesting price action on the banks today. We'll just kind of look at it abroad. As you guys know, most of these banks, except for JP Morgan, have really been selling off. Bank of America and GS have been getting hit pretty hard. But Citi, they didn't beat earnings. They missed earnings. Yet we gapped down. Let's see here. Gapped down about $1 or so, and then it went all the way up to 59 bucks. And now if we're looking at Citigroup here, it's keeping the trend. So you're like, if they missed, how did they? It's the price, guys. It's all about the price. And if it doesn't matter if they missed or they beat. Yes, you want them to make money. Yes, or I mean, depending on your position, it is. But if you're bullish, let's say you're bullish, you want them to make money. You want them to post profits, and let's say they did do all those things and it went down, then we're probably going to have some trouble. But what's interesting here is they missed earnings, but we went up anyways. It went up 4% almost. I mean, it was nuts. JP Morgan, if you're looking at them, they have earnings tomorrow before open. They're not doing as bad as some of the other ones. I mean, this is pretty bad. Everyone got hit pretty hard in the December sell-off. I mean, everyone got hit. WFC as well. Wells Fargo, they've been in trouble for a while though, but I mean, obviously they got hit. But if you're looking at these charts here, they all look the same. I mean, they all look the same. We had a strong sell-off and now we're having recovery. If you're looking at GS as well, this was a bit more of a dramatic sell-off, I think, because it started happening. Their initial Goldman Sachs initial sell-off started off in early November instead of like early December. So they were a full like 30 days in before the initial market sell-off. And yes, it's recovering, but it's also recovering much slower. However, you can see here that premium's getting cheaper, so that's good. Because it was insane there. It was just insane. So the banks, I think once JP Morgan's going to be the first really like major bank to be reporting tomorrow. And, it did run, JP Morgan did run 1% today. And if you're looking at these stocks here, these bank stocks, I think they brought the market up because we were down on the S&Ps. We were down quite a bit this morning. We were down essentially, we gapped down, let's see here. I think we were at least 1% down. So we were at like 25.95 and we opened at like 25.78. So we came down to 25.70. We were down like a percent or more, 1% or more. And then things just started pushing higher. And as you can see, we started pushing higher in the S&Ps a little bit. One interesting thing that I will say today is if you're looking at these here, we have ES, the S&P, Dow, and then the NASDAQ. The NASDAQ was getting slammed more than double of the other indexes, indices. They got slammed. NASDAQ got slammed today, like slammed compared to the other ones. I'm not saying they were down 2 or 3%, but when you're looking at the market as a whole, you're looking for correlation. You're looking for what's moving together, what's not moving together. And if you guys remember, in the December sell-off, every single chart, like pretty much every single chart, looked the same. every single chart, even the daily, the year, like it was insane. The 15-minute candles, the 10-minute candles, all of them looked the same, which was kind of scary, which you don't like. And now today we have stocks that are ripping. We have stocks that are falling. Amazon was down a little bit today. Amazon had some crazy price action today. Went from $15.95 all the way up to $16.48, down to $16.20. You had Facebook just rip all day. I mean, literally just nonstop gap down and rip. I mean, just literally, couple down ticks, but didn't really matter. They were up 1%, but they went from 141 all up to 146. I mean, that's nuts. But I mean, if you're looking at Facebook here, it needs to get higher. Like I was telling you guys before, how it kept making lower highs coming on down here, and now it's starting to test this high right here. So we'll see. We'll see if it breaks through. If it breaks through, definitely will be a nice trade to put on. You could put a trade on here. The only thing I don't like about trading before it breaks through is that it could actually stop until earnings, and then it'll be like really boring. Matthew, what's going on? Mike Matthews, WFC. I think we did cover that a little bit. Yeah, this looks the same as Bank of America and all the rest of the banks. So I mean, all the banks are following each other. So JP Morgan's going to lead the way tomorrow. I mean, Citigroup did post today, but we'll see what happens. Puts were juicy for tomorrow. Sergio, yeah. I mean, we had the down move today. It's hard to say. I would say because of where we're at with earnings, it's hard to say if we're going to have really a breakdown. I think we're going to have a settlement, and then we're really going to kick things off. Like after this week, everyone reports. I mean, we have the banks. We got Delta, and we have United Airlines. So we got some of the airlines this week. We got the banks. Those are the major ones, and we have Netflix earnings this week. But then next week kicks off. You got to look at the calendar. A lot of others. Did I trade Activision? I did not. I should have. I got kind of tied up here. GE going up now? I don't know. Maybe. I would say GE's having a tough time. They're having some trouble getting above 9 here. If we're looking at GE, seem to be stalled out here. Like I said before, I don't really like trading. I mean, I still have open 8. I have 8 strike puts on this, and hopefully it gets rejected here. But it could stay here for a while, So that's why when you're trading single-digit stocks like GE or Snap, like you want to push it out. You want to push it out like 2-3 weeks or a month, because it literally could sit there. It could literally sit here, and it also got a little bit of premium crush today because it's literally just been. I mean, if you're looking at this, besides some minor drops, I mean, we've been chilling the same price for 2-3 days here. Let's see. Visa, Adolfo, got you. Let's see here. When is Visa? Let's see. Visa is on January 30th. Definitely looks to have topped out a little bit here. Not saying it's not going to go up, but I think it's just like with the rest of the market, kind of consolidating. The reason why I didn't add a lot of positions today, or add, typically when I'm down on my account, like I'm down today, like 140, 150 per account, due to premium crush. It's not. Normally you guys see me play some defense and offsetting and evening it out. The reason why I waited is because what if tomorrow's another flat day? What if tomorrow they crush it even more? So really, I wanted to kind of see where we open tomorrow, and I wanted to see if we're going to have some more flat days, and then I'll start thinking, okay, instead of trying to play this week, I got to think a little bit smarter. I'll start loading in positions for next week, so that way if we get some movement and premium gets more expensive, we'll be able to make some money in there. FC, I'm afraid the 125 strike may not be far enough. We'll see. We'll see what happens the next couple of days. Yeah, I mean, there really hasn't. The one thing that I will say is GE was awarded a $450 million contract with the Pentagon. over the weekend it was announced, and the stock didn't even move. I mean, it moved it's down 4 cents. I mean, you know, I'm already done playing this week. Funny you said that. USO bull run, I would say, I mean, oil's above 50, which was kind of what I was thinking of, but I mean, I like oil above 50 for being bullish, but it's tough. It's definitely tough. I mean, this was definitely a nice move on oil up to 52. You know, maybe if it kind of bounces here like it did here. Last time it was, you know, I was playing this where I thought it was selling off and holding here, and then it was going to go up to like 57.5 or so. Instead, it broke down. So we could just be back in range here. Essentially, we're back in range, and we could stay here for quite some time. So just be mindful of that. We could just be bleeding premium out. Yeah, GE would be nice. 850 would be nice. 810 would be a gift. CGC, XLS, Dustin, we'll talk about CGC. And there was the other one, PCG. PCG was the wildfire. PC, I think so, right? XLF, you know, like I said, it's the same as the bank stocks chart. So we just gotta, I mean, unfortunately with the banks, we just gotta wait to see what JP Morgan does. Once JP Morgan reports, we can then put positions on Bank of America and Goldman Sachs and XLF kind of accordingly. You know, and as you can see, look at this, just look at this premium crush last couple of days. I mean, just crazy here, just nuts. I mean, just insanity. So, you know, buying and holding options is sometimes not in your best interest, even like long term. Like if you're holding like further out, you're getting crushed terribly. PCG. They're talking about filing bankruptcy. I guess I don't really know much about them, but I guess a lot of people in California know more because it's in your guys' news more, due to the wildfires and that kind of thing. But they did report that they're potentially going to have to file bankruptcy or something like that. If you're looking at the option pricing here, for some reason, you know, even though it's been cut down, I guess because it's been flat, the market was not expecting this move, and that's why it puts her up 2,000, 3,000, 2,500% here, because the market essentially has been flat for a month or two, and it's come down, but they weren't expecting you to go from 15 to 18. You know, I would say it was probably maybe. I mean, I don't know why they would. I guess it was underpriced because they were thinking it was going to stay at like 16 for a while, 15 here. I don't know. But either way, they were underpricing the options, and that's why these are up so much. You know, where is it going to go? I mean, it could go down lower, definitely. You know, but now the expected move is like $2, and then it gets down to like $6, and you know, the expected move, if you're looking at these options here, expected move for this week, only 4 days left, $2.40. Next week, 11 days, $2.80. And then 3 weeks out, $3.50. So like, I don't think you're not today. If you put a position on today, you're not going to get a good deal today. You're not going to get a good deal today. And then they don't even have strikes out that far for some of these. There was some volume on them, but they do have volume. They have more volume on the monthlies. I don't know if the weeklies were just introduced or what, but very, very interesting. You know, for me, I don't know. I'll look at it, but I don't think I'm going to play it. CGC, Canopy Growth. I haven't been trading the weed stocks, but it looks like CGC, what I do like about CGC at this point in time, not about the company, just about the options, there's some really good volume. There's some really good volume on these options here for this week. Let's see what next week looks like. Next week, not so good, but let's see the monthlies. Good volume on the monthlies, which is nice to see. You know, definitely trading in the thousands. These are trading 4,000, just at the money there. Obviously, the calls, it's heavily skewed to the call side, obviously. if you're looking here, I guess they had some news, but it's definitely running. They had some, I think New York approved something. I don't really know. I didn't really look into it. But if you're looking at the price, doesn't matter what the news is. If you look at the price, you know, here you can see here last time it capped out was at like 46. So there's definitely room to go to like 45, 46 before maybe coming back down to 35. If it breaks through, you know, easily could go to 50, 55, 60. You know, I would say probably, you know, if it breaks through here, you know, could definitely retest this 55. Doesn't look like it's super, super strong up in here. You know, it's hit 55 once, twice, and then it broke through before ultimately coming down. So, NY approved hemp production. Okay. So, I don't know. Definitely will be one on the lookout. I typically haven't been trading like Tilray and CGC just because the volume was so bad. But if volume is there, I don't see why not. You know, I don't know about Tilray. Does Tilray, do they have volume yet? This has been a tough one to trade because the premiums were just like so rich. All right, Tilray this week, they do have volume, but you're gonna have to be careful what strikes you choose here. You know, like this one at 100, it's got 3,500 volume, but 99 only has 202, 98 has 176. And then on the call side, 100's got like 2,900, and then it kind of goes. These have better volume, but not great. The bid and the ask is kind of wide on a lot of these too. Like, you know, 520 ask, bids 430. So you just got to be careful. You know, that's why you want to trade something with more volume. You know, if you're looking here at these 105 calls, there's 3,700 traded, and the bid and the ask is about $35. So 410 ask, bids 375. You just got to be with Tilray. I think you just got to be very careful. Yes, you could make money quickly, but as you guys know, if you're making money quickly, you can also lose money quickly, very quickly. YOLO crypto. Yeah, I don't know. I mean, I think the weed stocks are going to be here to stay if the government allows it to be done, and so far, the government is legalizing in the states. Not all states. I mean, not Illinois. I know Michigan just approved it. I mean, Colorado was the first, and then I don't know. Does California allow? I know a lot of West Coast people. California. Hamed, yes, C calls did go up. C calls were up. Not big, 40% or so. However, if you bought the gap down on C, Hamed, you would have made way more than 40%, 80% here. Let's see here. What do you think about BAC 2650 call 118? Let's take a look. 2650, 118. Their earnings are the 16th. So you're gonna hold, Baron. You're gonna hold through earnings. So you're gonna trade this into earnings here. 2650. I mean, if you're looking at, you know, IV went down today. It's definitely a good day to put an earnings trade on if you were gonna trade it. At 2650, 43 cents. You know, essentially you want this to move to like 27 to make some money, and then move to like 27.5 to make some, you know, you want it to go up to like another $1 for you to make like $100 or so, $80. Let's see here, Delta's 47. So if it goes up $1, you're gonna make another $47 or so. So you're gonna want it to move. You know, it depends on how much you want to make, but I mean, if it does go up $1, you make 100%. It's not bad. However, the only thing that I will say, the dangerous thing, if you're holding this into earnings, and let's say BAC comes out flat, like BAC opens at 2630 or 2640 or 2650 even 2660 or 2670, that premium crush is going to come through out of the money and right at the money. The premium crush is going to come through. You're not going to make anything. So it's kind of up to you how you want to play it. I decided YOLO and drop an Iron Condor and IBM. Well, you're taking my money right now. I'm currently down on IBM. On my position, I'm down I'm down $60. They ate that. Did you put the premium? Did you put the Iron Condor on today, or did you put it on Friday? Because they're crushing IBM. They let's get into IBM here. IBM has been moving between 122 and 121 for 4 days straight. You know, right here. Let's zero in on these right here. Yes, it's dropped below, but it's ripped back up. It's dropped below, ripped back up, dropped below, and it's ripped back up. You know, crushing them premiums. Can't hate on them though. Can't hate on them. I mean, IBM's paid me for a long time, so you know I can't hate it. You know, 1 trade, 2 trades. I'm not gonna. It is what it is. If you're new here, say what up. Definitely want to meet you. Say what up. Let's see here. BAC, even with good report earlier, the stock didn't move at all. RJ's. The one thing that I will say is the stock was a lot higher on BAC last earnings. I mean, we were at like 28. Obviously, it was a lot less. Looks like it's going to recover. But yeah, I mean, if we come back up here to 28, it could definitely be a premium crush. I mean, that's what you got to be careful about. Is the most dangerous thing when buying premium on earnings is it not moving, and then the option sellers get paid, and then you don't. Scott, oh man, glad you didn't die. Glad you're here with us. Man. Yeah, I mean life is short though. We only get I tweeted this yesterday. We just get one shot at this. We gotta work hard, and we gotta do what we feel is right, you know. AMD. I mean AMD's been moving, but they it doesn't look that exciting. If you're looking at the chart, it doesn't look that exciting. You know, today it was only down 4 cents. And if you're looking here, because we're flat, I mean, just like the rest of the market, I mean, these premiums, these are down. If you're out of the money today, you're down 40%, you're down 60%. And I think a lot of you guys have been feeling this. Like I felt that on IBM and Caterpillar. If you're out of the money, if you're looking at these right here, you're down 40, 50, 60% because the stock didn't move. That premium crush was real today. I mean, real. Like it was real. Like I don't know how else to explain it. Like, but I mean, the stock market opened up and instantly your premiums are crushed, and they just decided to crush premium today, which I mean, it happens. I mean, but we've been talking about this for a long time. As a beginner, is it better to buy or sell? Is it better to buy or sell options? I think both are equally difficult. I think you have to zero in and understand when you're buying options, you have to understand what that means. And when you're selling options, you have to understand what that means. So when you're shorting options, it's a whole different ballgame. But I think it's important to understand how option sellers make money. So that way, when you're buying options, you know ways to avoid that, if that makes sense. But essentially, I like to buy options. I like to short options. It depends what the market calls for and the strategy that I want to put in place. Dustin sold my AMD Strangle, thankfully, early in the morning. Yeah, I mean, they just AMD is just range bound. I want to continue. I want to continue. Not sure what that's going on. But this has been range bound. Definitely nice move. You know, I think because it's range bound, you have to play the support and resistance. You have to play, you know, the 21. 21 got rejected to 18. Now we're headed back up to like 21. Will it get rejected at 18 again? I don't know. You know, really depends on, like I said at the beginning of this video, earnings. We got earnings January 29th. Is it going to run before earnings? Is it not going to run before earnings? It's going to stay the same. Really, right now, you just kind of watch and play it that way. It could try to go up to like, you know, 26, 28 before earnings, or it could just sit here and do nothing. And maybe earnings is the catalyst that either breaks it up or breaks it to the downside. King Jacob, Amazon. Yeah, Amazon had some crazy action. These guys have earnings as well on January 31st. These guys, you know, like some other charts here after the run, are looking toppy, but not looking terrible. Yes, we're down almost 1.5% today, but like today, like the title of the video is like, which way the stock market is going to go? Which way are these stocks going to go? We're waiting for earnings to go out. Yes, these do look toppy after running for so long, but then you're like, well, earnings is coming up. Do you really want to get into a bearish position? You know, do you want to put yourself in that position? You could get rewarded before earnings, but you kind of have to have it in the back of your mind. Earnings are coming up. You know, Amazon is got some tricks up its sleeve. You know that they probably did well on their holiday shopping. You know that they did well in AWS. So, do you buy the dip? Do you short it? You know, it's kind of up to you to decide. Right now, when earnings are coming up, I get very, very cautious about pretty much everything. Like I'm trading slow. We're just going to, right now, what we're going to be doing going into earnings is we're going to be just trying to hit targets. We're not going to try to put on 5, 10, 12 positions. We're just going to be looking to hit targets and get out. Get in, get out. Take profits, redeploy capital. Take profits, redeploy capital. Rinse and repeat. I'm not looking to get crazy bullish on retail stocks. I'm not looking to get crazy, you know, I'm not trying to trade sectors. I'm just trying to look at opportunities and get in and get out. Macy's. Yeah, but FC felt that theta burn as well. Macy's. Let's see here. Yeah, Macy's had another down day. It's just starting to move down slower. You know, their 52-week low, though. Their 52-week low, if you're looking here, is $22. So there's definitely room to the downside. It's going to need a bigger move to make some money. But let's see what their premium's up a little bit, but still down from where it was, as you can see. You know, premium across the board is just cheap. Well, I wouldn't say cheap. It's getting cheaper. They ran, because of that down move in December, they ran premium so high, it was very difficult to put positions on. Yes, you could find deals. It took me longer to find deals, but it was harder for like a newer trader. It was definitely easier to lose money because of premiums. But yeah, I mean, if you're looking at these right here, some good volume on the puts, also some good volume on the calls too. So right now, I would say, I mean, obviously the puts have more weight, but people are waiting for a dead cat bounce, but I don't think it's going to happen. I don't think Macy's is going to happen. I think it's probably going to revisit 23 before it tries to come back to 28. You know, that's my opinion, of course. Yeah, get in and get out. Don't worry, Linda. We're always here. We're always here for you. We're always here for you. I had to shovel snow this weekend while you were sipping iced tea. So I'm not bitter. I'm just cold. So yeah, I mean, I think the trade, if I was looking for a trade right now on Macy's, it would probably be a bearish strangle. I would probably be looking, I don't think I would do this week. I would probably do like next week. I would probably buy like the 25 put and then like the 26. Let's see here. We probably want to do, I would probably do, there's not a lot of volume on these for next week. But the bid and the ask isn't too wide on these calls. There's only 22.6 volume, but the bid and the ask is pretty tight. It's only 2 cents, as you can see here. So I would probably buy, like for next week, if I was going to trade this, this would probably be my trade right here. I would probably do the 25 put and 26 call. Or if I really want to kind of push it, I'll do that 1 standard deviation and for 83 cents. So I'd do the 25, 26. If we do get a bounce back, probably would be strong, and this would offer some protection here. But that's probably what I'd be looking at Macy's. Actually, not a bad trade, not a terrible trade. So if it does push below 25, you'll get paid rather quickly, and if it doesn't, however, you'll just get bled out like we saw today. so enter at your own risk. Enter at your own risk. But that would probably be the trade that I would do if I was going to trade Macy's. But as you can see here on Macy's chart for the week, it's just kind of slow. I mean, it did gap down a couple points here. It's just, he had a nice tumble here. Would have been way better by the 25 put when it spiked up. You know, I guess if you're gonna trade Macy's, right now you wanna short the spikes. You'll make more money instead of buying the bottom here. No, we're buying some bottoms here. If it spikes up at open or something like that, you probably wanna short it. It's kind of like Macy's is kind of like the new GE, which maybe we'll bring into our trading portfolio here. Since GE is getting a little tired here, maybe we'll move to Macy's. I was looking at it, but I haven't put a position on quite yet. But could be a nice little trade there. Play at the 23. It did touch 24.83 today, so that's not bad. So maybe we'll get a green day in Macy's, but doesn't look like it. All right, we got about 5 minutes left in the stream. Anything else you guys want to look at, talk about, questions, stock tickers? I know we went over a lot today about earnings. We went a lot about, you know, the stock movement. We talked about oil. We talked about my positions. We talked about pre-earnings runs, after earnings. I mean, what else you guys got? Got about 6 minutes. Surprises me. Thanks. Glad you're here. Thanks for the feedback. If the video was of value to you so far, hit the like button. I'd really appreciate it. Hit the like. You guys have been showing some real love. Richard, again, thank you so much for the $5 if you're still here. Appreciate you, man. Hope you made some money. Glad you had a nice vacation. It's been great having you within our community. Same with everyone. I mean, we have a lot of new faces in here, but we also have a lot of the OGs. I have a question. TLRD 118 puts early last week and premium stayed the whole week, and it got crushed today when stocks went down more than 70%. I don't understand. Premium crush happened across the board. They just took premium out of the market. They just sucked it out. If you want to understand premium crush, watch There Will Be Blood. In this situation with the stock market flowing in either way, would you look to do strangles? Billy, I've been trading strangles, mostly strangles, since September, October. The one thing, Billy, that as you can see today, and my portfolio reflected it, is because of the strangles and because of premium crush, I lost on both the calls and the puts, and people like Kit who sell premium made money on both legs. And as you can see by like AMD, so it would have definitely been better for me to put those positions on today than it was on Friday because the crush happened. Don't think they can't, just because premium crush happened today, don't think they can't crush it tomorrow either. I mean, premium is still a little bit high, across the board. I mean, most stocks are at like 40 to 50% IV rank. They could bring it down to like 25 even, or 30, or even lower. Especially stocks that report earnings, like Citibank. Let's see what Citibank is. Citi's at 30. So after you report earnings, so as you can see here, Citi is at 30 right now. They're sitting at 30. So you got to be careful. You got to be careful right now. I'm still going to be trading strangles, sure, but I'm also going to be cautious of when the premium crush happens like this. A lot of the times we kind of convert into the bull's return. The volume in the market gets really low. Like the trading volume today was only 1/5 of what it normally is, and the pricing reflects that. So What indicator allows you to see if premium is up or down? So Adele, you can look at on Thinkorswim. If I mean, I don't know what you mean by premium up or down, but if you want to look at, like, let's say let's look at AMD, you can see that, you know, percentage change. If you add this column, percentage change, this column, you can see if these calls or puts were up or down today. Calls and puts were both down today. If you're looking at Caterpillar, where I got squeezed out a little bit, see, look at this, my position here. These were down 30%, and then my calls were down 36%. If you're looking at IBM today, IBM, it doesn't say here what the puts were, but the calls were down 62%. You know, so you gotta be careful. You gotta be careful. This is what a premium crush looks like. It doesn't mean that you were wrong. It doesn't mean that your assumption was wrong. It just means that the market took the premium out and it chose today while I was holding these positions. And yes, you can get cheaper premium, but don't think that the premium can't get cheaper than what it is. Just because premium happened today, they could bring the premiums down all week. Carmine, take it easy. So I would just sell my cat Stringle and Square, then re-enter. Yeah, I mean, I'm gonna think about what to do. See what these earnings do. I don't want to get. What the market tries to do to you is they try to squeeze you out. So I've talked about this many times. The goal of the market is to take your account balance and bring it down to zero, which some of you have experienced by blowing up your accounts and stuff like that. Today, they're squeezing premium buyers. They're squeezing premium buyers in hopes that you lose money. And yes, the market didn't move much today. The market hasn't moved much in 4 days. But I've been talking about this for weeks, that eventually the market's not going to move. It's going to suck the premium out. Premium gets rich. It can't stay that way forever. Just like premium can't be cheap forever. It could be cheap, or it could be expensive for a long, long period of time. It just can't, it's not going to be forever. So if premium's on the high end, you have to understand that it's going to come down. And then when premium's on the low end, you have to understand that it's going to go up. But right now, premium's kind of like, after today, premium's really more mid-range. And if you're looking at like the VIX, like I've been talking about, you know, we're back into range where we're back into this range here on the VIX. You know, we were bouncing between like 25 and 16. We're back in between, you know, we're 16 being the bottom of recent months, and we're kind of in the middle there. So we could come down lower to like 16, and premiums will get cheaper. We just had this sharp drop, even though VIX is up today. They just decided to crush premium across the market. They lowered the expected range of the movement. Adolfo, have a good one. So in terms of what my strategy is for Caterpillar, what my strategy is for IBM, I'm going to see where we open tomorrow, and then if we're leaning, if we're leaning bullish or bearish on Caterpillar or IBM, maybe I'll add one call or one put to either side, and then I'll leave it. But what I'll probably look to do is open trades on different stocks to offset those potential losses. Yes, I could, but we could still move a lot. I don't know what earnings are going to do, so I just really want to play cautious right now. And usually when I'm not sure what to do, what strategy to do, the best thing to do is to do nothing, sit on your hands, just hang out, chill for a second. It's hard when you lose money due to premium crush like that, but you don't want to go into something and instantly lose more money. You want to be able to get that back. So the only way to do it is play it smart, play it slow, play it low. The opportunities will come. I mean, I think that I got a good opportunity on Netflix if if Netflix runs a little bit pre-earnings. If not, I'll take that position off and then I'll trade it after earnings. You know, I think this week will be good. This premium crush, as we're premium buyers, and we held over the weekend, we were just met with 50 to 60% price cut. You know, so we'll definitely see what happens tomorrow. Yeah, They want FC. They want to squeeze you out hard. You know, after they bleed everybody out, then they'll start moving the market. But you know, how long? I think it's easier, instead of adjusting those positions, I think it's easier to put another position on or two and then come back to those and see what you want to do with them. Because my assumption, since the stock price hasn't moved, like my assumption on IBM and Caterpillar, since my assumption hasn't changed on IBM or Caterpillar, I still have the same position. I still like my position, even though I'm down some money. I still like my position. I'm still bullish on Caterpillar, and I was thinking that IBM was going to break below 120, but it looks like it doesn't want to after touching it all day today, and then it touched it a couple times here. So IBM, I think Caterpillar has a better chance of making money than IBM. So we'll kind of see where we open tomorrow. If we gap up, you know, we'll make some decisions. If we gap down, you know, we'll make some different decisions. So it really depends. It really depends on what's going to happen with these earnings and what's going to happen with the market moving forward this week. You know, as you can see, we're just getting killed here on these because these are staying. Caterpillar staying the same. IBM staying the same. So that's why we got crushed in there. So that's my little spiel. So anyways, you guys have a great day. You know, if the video is about you, hit the like button. If it's your first time here, hit subscribe, but more importantly, connect with our community. Hit the links below to our Facebook group and to our Discord. Great community. You got questions, we answer questions on there. We answer questions on here. You know, we do what we can do to make options trading, you know, I'm not going to say fun, but, you know, profitable. And that way you can maybe turn that corner to profitability. So you guys have a good rest of your day. Stay safe, stay green. It's always us versus herd.